this is stage one. It wouldn't be anyone on this call, right? But it could be someone that you know. It could be a young person you're mentoring. Could be maybe your child that's wanting to start passively investing towards financial freedom. So this is stage one. So I think if someone has an active income or business take home of less than $1,000 a year, that what I would say is that they should probably focus on investing in themselves. So this is where joining masterminds would be great, like learning high ticket skills. So whether it's sales, whether it's coding, whether it's something else, doesn't matter. Just something that you're really good at and then that has a market, right? And then this is where like networking becomes really crucial because you're going to meet like-minded peers. You're going to meet mentors. You're going to meet people who have actually accomplished what you want to accomplish, right? So this whole stage is about mindset up leveling because at this point, the investable asset base that you have or your access to investable capital isn't significant enough to really move the needle. So I think investing yourself will be the highest return on that dollar. So this is what I would say that people should focus on in stage one. Okay, so this is, you might be familiar with, this is the cash flow quadrant, right, by Robert and Kim Kiyosaki. So this is from their book, Rich Dad and Poor Dad. So this shows the evolution of someone's path towards financial freedom. So everyone typically starts out as an employee, me no different. So when you're employee, basically what you do and your time is dictated by your employer, right? So usually people that migrate into the S quadrant. So this is where you're self-employed. So you start a small business, you're probably a solopreneur, maybe you're a freelancer, you're now your own boss, but you're still trading time and energy for money, right? So this is of limited scalability because we only have so much time and energy, right? So from here, what people typically do is they then look at scaling their business to become a B quadrant person. So B quadrant person, you still could be a business, you would still be a business owner, but you don't need to be involved in the day-to-day anymore. So this is where you have your companies actually make money for you. So your companies are giving you the cash flow. And then from B, then you migrate into the investor quadrant. So this is where I think everyone here is trying to get to. So this is when your money is making money for you. So it doesn't matter if you're sleeping, you might be traveling on vacation, doing whatever you love, but your money is still making money for you, right? So regardless what you're doing. So this is really, where you want to be. Okay, so going back to the different stages, this is what I call stage two. So this is where if you have a high ticket active income from a W-2, or it could be from your business, but you're taking home about 150K or above. And this is a good place to start accumulating what I call the investable asset base. So what you want to do is at this stage, you want to stabilize and scale your income because that is the source of your investable asset base, right? So you want to continue to level up your mindset, your skill set, your network, continue to learn about investing, continue to talk to people who are kind of like-minded and doing similar things, get plugged into that deal flow. And you want to start to just start, right? You want to start to allocate your first 50,000, 100,000, $200,000 into your investment base. And for me at this stage, because my goal was very focused on getting passive income at that point, getting to that point, I was stashing away, aggressively, right? So I have an investment first approach. So when I receive cash flow, I automatically put away a big chunk, right? So I would say at this stage, try to do at least 20%, unless, you can do more, but if you can do more, do more. And then this will give you that first kind of boost in accumulating your investable asset base, which will become the basis of your passive income. Okay, so stage three, this is what I call the passive income starter phase. So at this stage, continue to keep your W-2 or your active business because the cash flow from those sources will help you cover your personal nut, right? It's going to alleviate the survival pressure, and it's going to free up your emotional or mental CPU so that it will allow you, free up some space to allow you to focus on investing. And again, the current sources, they will be your current source for scaling your asset base, which is very important. And, again, at this time, stash away as much as possible, but don't forget to live, right? So whenever you did something great and did something positive, you just invested in your first deal, then you want to reward yourself because you want to form a positive association. So for me, at this stage, I, feel really good when I'm investing. I'm always looking at my how much cash reserve I have, how much idle cash I have. I don't let the cash sit idle. I'm always cycling the money um, out of the reserve into investment opportunities and cycling that passive income or the growth from my investments back into the cash reserve and rinse and repeat. Okay, stage 4, this is what I call the basic freedom, but getting to it. So you're on the path of getting to your basic freedom. So this is where your personal expenses are partially covered. So whether that's $2,000 a month or $5,000 a month. And at this point, you're going to start to see quite a bit of cash coming back to you from your investing efforts. And so, this is where some of that money that's made for you from money you can now cycle back into your investable asset base. Okay, so let me actually show you at this point a worksheet that I designed to help you see visually where you are and how you can get to the different stages. Okay, so this is the financial freedom through passive investing worksheet. And if you want a copy, just message me. Happy to share this with you. And as you can see, I have the different stages here, right? So this is basic freedom. So this is where, of course, you have housing, transportation, food, health insurance, and your miscellaneous. And these are fictitious numbers, so I don't know what it is for you, but I just kind of peg some numbers I think would be average from this group. So let's say that your monthly nut is about 8,000. So then what kind of investable asset base do you need to get to that 8,000? Well, it depends, right? So it depends on the return you're getting from your various investments. So let's say if your blended return is at 6%, then you're going to need about 1.6 mil of that investable asset base that I keep talking about. But if your return is higher, so let's say at 12%, then you need less of that base, right? So for me, as someone that's in the alternative investment space, private equity, 6% is extremely low. So you can probably get 6% by investing in stocks and bonds and in an index fund. So if you are confident or you become more confident in your investment choice, you can get these type of returns on a fairly regular basis. So then as you can see, the higher the return, of course, your investable base doesn't need to be as high to give you what you need on a monthly basis, right? So then from basic freedom, you would, you know, graduate from that and then go to the freedom light. And this is where your monthly nut is covered, but you can start to add things, discretionary spending like clothing, wellness. Maybe you're someone that likes to work out with a trainer. Maybe you like to get a massage every week, that kind of thing. Miscellaneous travel. Like I'm a big traveler, so I allocate a lot of my budget into travel. So at this stage, you can see that, okay, every month you want to be at 19,000. So again, how much of capital base do you need? Well, again, it depends. It depends on the blended rate. So let's say that you're getting a blended rate at 12%, then you would need 1.9 million, right? So from here, the next stage is what I call Freedom Plus. So this is your Freedom Light number, and then I'm adding another 50% in just discretionary income. So as you can see, it's the number starts to get pretty big, right? So at 40,000 a month, I mean, that is so much money. I think for most people, even most people in this group, like I don't think anybody would be spending really 40,000 a month, but if that's what you want, then, let's just look at the numbers, right? At 6%, if you're just investing in index fund, okay, you're going to need a bigger base. You're going to need about 8 million. If you're, if investing in something that gives you a higher return, like at 15%, then you would need to have 3.3, right? And then from here, again, the next stage, financial abundance, adding more buffer, more discretionary spending. This is now taking you to about 50,000 a month. So you would need to have a bigger investable base. But what I was talking about, I think it was stage 4 of the journey. When you start to see this type of numbers, you can start to really aggressively cycle out part of that money, right? So this is, remember, the passive income you're getting, but let's say that you're getting that, but not every month you're traveling, not every month you're having to, allocate discretionary spending for whatever reason. So why don't you then cycle out half of that? So say the $20,000 back into your investable base. So very quickly you can see how it snowballs, and then very quickly your asset base, investable asset base, can grow from 500K into 2 million. Like it actually happens pretty quick. And then, this is kind of my goal. I'm trying to get to this final stage, which I call FU money. And so this could be things like uh, basically covering everything. Plus, you might have a vacation home, right? You have some operating expenses. You have private jet membership. You add more bonus. And then, this is, uh, the kind of FU money number that works for you. So again, depending on what you invest in, you need to have a bigger base. Okay, so let me go back to my presentation. Can you see my screen like that? Okay,
Yep.
so yeah, okay, great. Yeah, so this is as I was saying, basic freedom. So you want to get to stage 5 where your passive income now covers your basic freedom, but then in the subsequent stages, then you have so much passive income that becomes the source of your investable asset base, right? So this is where you want to be. And what you want to do is continue to scale that, right? And of course, at this moment, if you're still at your W-2, or still running your active business, pumping out cash, just cycle that into your investable asset base, and that's how you really create that velocity into accelerating your path to financial freedom, right? So here, I did some Googling. So if you're at about $50,000 a month, and that effectively make you the top 1% in the United States. So what is the size of the investable asset base you need, or how much, questions like how much money do you need to stash away from your W-2 or your active business? Well, this just all depends, right? So I'm happy to share that worksheet with you. The worksheet has actually 2 other tabs I forgot to show you. So one tab gives you a breakdown, helps you clarify all your expenses. And then the next tab actually helps you calculate your net worth, right? So if you are interested in getting a worksheet, just message me and let me know. I'm happy to share that with you. And again, there's always a trade-offs, right? So in making investment decisions, it's always a trade-off between your goal velocity and also your present enjoyment, right? At what point do you focus on the growth of that capital base? And at what point do you focus on actual passive income so that you can have that to enjoy, right? So it just depends. And then, it's a constant series of you assessing the trade-off between what's a must-have versus a nice-to-have. Okay, so I think the final stage for me in this investment journey, which is the stage I'm in now, which I call the game of money, right? So this is where the passive investment cover my personal expenses. Some of my nice to have expenses are covered now. But because I love passive investing, so I decided to come back into the space, and that becomes my business. And I'm part of the lifestyle investing group, and a lot of times we talk about passive investing not actually being completely passive, because while you're allocating your capital into passive investing opportunities, you do have to actively watch them, right? So you have to actively do due diligence and assess the deals before you invest. But after you invest, you also want to keep an eye on how these investments are doing, and reallocating that returns that you're getting from them, right? So no passive investing is completely passive. It is always a little bit active. And so the reason why I am back in this business and back in this field is because, well, one, I'm really passionate about it, and I think anyone can replicate this path to financial freedom. And at the same time, I am also working on scaling my passive income, right, and scaling my investable asset base. So by working in private equity, it gives me a platform, gives me a front row seat on looking at all the deals that's out there and assessing, what are the best deals that exist today. Okay, so I've been doing a lot of talking. So here, what I want to do is have everyone take a minute to reflect on just reflect on where you are, what stage you are, and what did you take from this presentation, and what are the 3 high impact action steps you're going to commit so to help you further your journey. So why don't we take a couple minutes to do that, and then we can open the floor up for a Q&A.
Hey, Alice, I just love the spreadsheet. That is so powerful. Will you be sharing that with us?
Yes, yeah, for sure.
Awesome. Thank you.